if there is anyone who watches our briefings in the States, I hope you had a good long weekend and welcome back. But just taking a look at the charts firstly this morning, going to kind of kick off exactly where we are right now, because obviously the US markets were closed yesterday, so very little occurred in terms of the afternoon period. And just looking at the DAX firstly this morning, and as you can see already, we've closed the gap completely to where we were after the initial drop that we had of the nuclear test that was conducted by North Korea at the weekend. We've now completely taken that move back. So as we were kind of commenting in the briefing yesterday, I was pretty strong of the belief that this was going to occur, because I think that ultimately the prospect of war, I still believe, is extremely small, and so not a great deal of reason, I think, for the market to go into a massive correction phase from an equity perspective. And much like the Japanese nuclear, or excuse me, intercontinental ballistic missile that flew over Japanese territory that North Korea fired around the same time last week, we then recovered that and some throughout the rest of the week. And in this North Korean situation, although the situation itself escalating to a nuclear level, and of course this being only their 6th test and the size getting bigger, the markets kind of brushed to the side. This in combination with other things we spoke about, the Treasury Secretary in the US, Mnuchin, talking about wrapping up the funding to assist the devastation that's happened following Hurricane Harvey, into then the debt ceiling bill to get signed off, also seen as a net positive, lowering the prospects of a potential government shutdown looming as we get into October. So already the psyche of the kind of negativity that was around the Korean development has faded already in the equity space. It was quite, I was lecturing to a couple of the new trainees that we have about this type of information, and it is, I guess, from a logical point of view, can be quite unusual to think that we are on the most contentious point of international relationships that we've ever had since the Cuban Missile Crisis, and yet here we are recovering an equity dip within the space of about 24 hours. One thing I'll be keeping an eye on is gold. Obviously gold had a decent pop higher on the back of that situation in Korea, but you can see already this morning we've started to edge lower, so definitely be keeping an eye on yesterday's low, and then the overall, well, yesterday's low being really this 1336.7. Any move below there, and then you've got R1 sitting just there below at 35.8. We'll likely see a bit of a gap fill to where we were at the end of last week, as maybe some of that risk premium just dissipates slightly on the situation. Likewise, the US coming back in, so although European equities have already closed the gap, US have yet to do so fully. You can see though we did gap substantially lower in the S&P, but we've already recovered more than 50% of that move already. So as the US come in, they start to reevaluate the situation, and we just have a quick look at a few news articles. I still have fairly strong confidence that I think that this will come up to pivot and close the gap to where we closed at the end of last week. Now whether that occurs today, tomorrow, certainly this week, I'm sure we'll come back up to those levels at some point. That's barring anything new developing, of course, on the situation. T-notes, very quiet, really tight range yesterday, pretty much confined it to a 6-tick range. So as per the instruction from your mentors, I could hear that we're talking to the trainees. It's kind of identifying the market conditions and just knowing that, you know, with some of these assets, then range trading is probably the astute play. But obviously North American participants returning, so we can expect those trade volumes to pick up again. Just having a look at the euro here, just seeing a flash lower, just stick it on a minute. Yeah, the euro just seeing some downside there. I'm just sharing it with you now. Just trying to see if there's anything I can spot on the headlines and Twitter. Can't see anything. all I can see here is a break of the earlier morning lows. And we've had the 119 handle was pretty much lining up with that. You can see here that level from overnight in the Asia Pacific session. We've tested it 1, 2, 3 times. Also the 119 handle. I'd imagine then this is kind of a stop run move, exacerbating that drop down about 20 pips in a pretty quick fashion in a 2-minute move. Okay, so let's have a look at a couple of the news items, things to be aware of, and helping this sentiment recover somewhat on the Korean situation has been a fairly, I would say, measured response in sorts from the US, i.e. Trump hasn't tried to up the ante, so to speak. He has just come back and said that Trump and Moon, so the two presidents, US and South Korea, agreed to show muscle after North Korean nuke. The US ambassador to UN saying strongest sanctions are necessary, and the US saying that they'll sell South Korea billions in new weaponry. And so again, it's kind of following, this would be, I guess, classified as a more diplomatic route, going down sanctions and going down further equipping this South Korean army as a threat of military force, not actually going into kind of more confrontational phase. And so as such, markets have started to recover, as we discussed. And then we just had China this morning. So this was a headline that's come out on the major news wires. China obviously a key component to peace within this specific geographic region, and the Foreign Ministry of China have said resolving issues on the Korean Peninsula by military force is never an option. And I think this is a really important comment as well to help the kind of situation de-escalate, because if China were to start to get more aggressive towards the likes of China, whilst China to more aggressive to the likes of the US in order to protect North Korea, then you've got a real issue on your hands. But we're getting the opposite of that at the moment. China have been very, I'd say, calm on the situation. And one important thing is, I think we mentioned this yesterday, there's the Politburo meetings happening in mid-October in China. I think it's highly unlikely that China are going to change tact before that point, because that's a very big and important meeting where China outlay policies across the board. So till they have those discussions, I don't think they're really going to change the way in which they're dealing with the Korean issue with anything other than diplomacy at this point. So that's North Korea. A few other things, though, to be aware of from overnight. We have had a continuation of fairly decent Chinese data. Chinese services gauge points to gains for private companies. So service sector in China showed a boost in growth during August. Private companies are gaining ground in their larger state-run counterparts. I think this was, I read a stat this morning on the service side. I think it was a 3-month high. Manufacturing, obviously, we had yesterday, has been picking up. So generally speaking, Chinese data has been continuing to remain fairly robust for the time being. Sticking with the same kind of region, you've also had the Reserve Bank of Australia, or the RBA, and Australia's central bank kept interest rates on hold, as to be expected overnight. So no real surprises there, but the commentary, they basically said a couple things. The recent data in Australia has been consistent with the bank's expectation that growth in the Australian economy will gradually pick up over the coming year. So you would argue then that potentially that could be deemed as them getting more positive, more optimistic on the economy and its conditions going forward, i.e. then leaning on being the side of hawkish. However, they did say that wage growth remains low and likely to continue that way for a while yet. So it's a little bit balanced, hence the reason for the decision to keep rates on hold. Some economists have been talking about then this is slight leanings though towards becoming a little bit more hawkish, but nothing outright hawkish. So looking at the performance of the Aussie overnight, maybe mild appreciation, but nothing particularly aggressive. Also to be aware of though for the Aussie, just given as well the focus on the RBA and China's economic state, given that the Aussie quite closely followed as a proxy for trading of economic conditions in China, is copper, given the commodity-linked currencies as well. And commodity analysts have been caught on the hop by a sudden rally in copper market that's driven the price of the industrial metal to its highest level in almost 3 years. Copper has risen now 20% since the end of May. Now, copper has been fairly volatile. I remember going back to the beginning of the year, certainly the beginning of 2016, when there was fears of a Chinese hard landing. Obviously, iron ore, copper, these industrial metals, and the fear of a Chinese slowdown were getting hit extremely hard. Whereas now you're getting the opposite. We've just discussed the PMIs, manufacturing and service in China, are proving to be fairly healthy and in a state of recovery. And so what this is doing then is increasing demand on the industrial metal side. And so copper is seeing the brunt of that, iron ore following suit. But again, copper up now near 3-year highs and having risen now 20% since the end of May. So something that has had read across, if any of those who trade single stocks. I remember there's a company you're probably familiar with called Glencore. Glencore have had multiple different issues, a variety of different reasons, which saw their share price plummet in recent years. But they've been one of the big outperforming stories. Year to date, I think they're up something like 30%, given their close ties to these type of industrial metals and their exposure to that. Okay, one of the other things, while we're talking about copper, that I wanted to put into a bit of perspective was about the car industry and what's changing in the car industry. Because one of the things that I think Will was talking about was about this new rulings that are coming through, about this push to move away from kind of petrol and diesel engines and more into electric vehicles is the plan going forward, as the, let's say, exception being Trump, but the global world powers become more let's say, aware of environmental issues and the impact that it's having. Now, this is an article that came out in June, but it helped put this copper demand possibly into a bit of context. Now, I'm not saying this is the reason why copper's just risen so sharply, but this is definitely going to be an underlying reason why copper may well be supported in the coming years. And that's because the growing number of electric vehicles hitting the roads is set to fuel a 9-fold increase in copper demand from the sector over the coming decade. So over the next 10 years, we're expecting basically 9 times more demand coming from the increase of electric vehicles. So as the technology improves, the price gap with petrol cars is closed and more electric chargers are deployed, obviously the demand here for copper is going to increase exponentially. One of the key things here, maybe one of the trigger points why this is in focus at the moment and a subject in vogue, is because we had Volvo, if you remember, only a few months ago. This is about 2 months ago. They made a landmark move because they're one of the first big car manufacturers that said it would stop making vehicles solely powered by internal combustion engine. All cars launched by Volvo from 2019 onwards will be partially or completely battery powered in a company called Historic End to Building Models based on internal combustion engines. So certainly, you know, this huge marketplace of cars globally is going through a dramatic change that's going to happen over the next 10 years. And then certainly with economic growth recovering in the likes of China as well, certainly prospects are looking bright for the likes of copper and industrial metals used essentially in electronic component parts, which copper is heavily used for, are set to look good going forward. So hopefully just a bit of background on that issue. A few other things to talk about, just to get you up to speed with. Not a lot of people now talking about Hurricane Harvey, certainly not to the same intensity as last week, but I did see a very good refinery status update graphic. I'll post this in the chat if any of you want to use it as a good crib sheet if you're trading oil and you want to be more reactive to news flow that you're hearing, what this infographic is good for is that it's defining operations and larger ones by those that are closed with the X, fully operational, the green, and those restarting or reduced rates in the kind of amber color. So obviously Motiva, Port Arthur, Total, Phillips 66, the Sweeney, ExxonMobil's Beaumont, some of these big facilities are still down at this present point. Well, this was as of last night. And so these are names and refineries to be aware of. And so hopefully this could be of use to you. I'll post this in the chat after I finish the briefing. Okay, one of the other things I just wanted to mention, because no doubt a lot of people will talk about it. It's not something we tend to cover a lot. We certainly at Amplify don't trade these cryptocurrencies. I must admit, I am a bit of a relic of the past, city kind of participant, where we look at cryptocurrencies with a high degree of skepticism, given it's not a traditional instrument. But certainly the opportunities have been fantastic in terms of some of the scope of movement that cryptocurrencies have seen. But the reason for me talking about this today was that we spend so much time in the headlines monitoring the upside that's been phenomenal in the rise of the likes of Bitcoin and various other cryptocurrencies. But what happened yesterday was quite interesting. And it just goes to show that as much as anything can rise rapidly, it can also fall incredibly quickly. And so this was the headline that a lot of people were looking at. This came out on Monday. This was as Bitcoin tumbled as the PBOC declared initial coin offerings as illegal. So let me just cover this in a bit more detail for those that are not aware of the situation. So Bitcoin essentially fell the most since July after the Chinese central bank, so the People's Bank of China, said that initial coin offerings, ICOs, are illegal and asked all related fundraising activity to be halted immediately. The PBOC said that it had completed investigations into ICOs and will strictly punish offerings in the future while penalizing legal violations in ones already completed. So to give you an idea of the 100 biggest cryptocurrencies yesterday, 94 of them fell on the back of this news. Now, why is this so important for the particular trade? Well, a lot of companies have been raising money through ICOs. These are, again, it'll be the same as an IPO in a more traditional format. So by offering their new cryptocurrencies for investors to exchange for existing cryptocurrencies or cash. In the last few months, these ICOs of fundraising have shot up exponentially. However, unlike traditional fundraising methods, ICOs are largely unregulated. And so this clampdown by China essentially resulted in this. Bitcoin is kind of the, as I'm told by crypto traders, tends to be the kind of the lead indicator. Bitcoin doesn't tend to be much like, I guess, if you're trading a large cap to a small cap stocks, the newer ones tend to be more volatile at this point comparative to the kind of headline Bitcoin, if you like. That fell about 12%, but if you start to go down the list, Litecoin 21%, Neo 35%, really huge swings to the downside that we'd seen in some of these currencies. One of the telltale signs, I think, when it comes to not just this particular way of trading, but to any trading situation, or bubble, I should say. Not saying that this is, and I'm not saying that this bubble has burst, but there's one thing to be aware of, is that when you start to see this kind of tweet, Paris Hilton going into backing in an ICO, so an initial coin offering for Lindian Coin Limited, a lot of people will start saying this is the top of the cryptocurrency bubble. And I don't blame them. As soon as celebrities and the retail market starts getting hold of a concept, that's when you know that basically this market has hit the top. We've seen this before. Historically, with the tech bubble. As soon as the broader public starts to get wind of what has been already a phenomenal rise in an asset, typically this is when the market then comes crashing down to reality. I think this following picture really summed it up for me. This is what my brother sent me a few weeks ago, and he said with the tag, if this isn't the top of the market, I don't know what is. You know, it's just gone crypto mad. This is on the London Underground on the Central Line, and you know, just people now, rather than spread bettors traditionally offering things like trading the euro, trading the pound, you can now trade the world's biggest digital currencies. And so, you know, at what point does this start to create these types of issues like what we had yesterday, which was more of a legal matter, if anything. Okay, quick look back at the charts, and then I'll have a wrap up of the day that's upcoming, because as I've been talking, I have noticed that gold, you know, we were just looking at that level. You can see it's just flirted with it. You can see there how stops just run on that break of the ranged low from yesterday. So now that we've got through there, it'll be interesting if we push back below and we go through R1. Expectations would be then we look to fill the gap from the finish on Friday. Things to contribute to that move, well, we'd want to see equities continue to push higher. You can see the DAX already is continue to brush aside this North Korean issue. We're retesting the highs that we printed on Friday here, up at 12,189.5. It'll be interesting to see how the US play out. If the US futures start to see some movement on the upside, as the US starts to come in later, then I'd be expecting maybe a little bit more pressure to come into the gold market. Okay, quick look at the calendar for the rest of the session. You've had the various manufacturing, or it's not manufacturing, the service PMIs, excuse me, for Europe, but keep in mind these are the final readings, so very little changed. The French service number coming in at 54.9, below the expected 55.5, so a minor miss. Same case with the Spanish number. The one I'm really concerned about, though, and we'll be watching very closely, is the UK service PMI. Why? Because as we know, service sector, such a key component of driving the UK economy and its performance overall. So what we're looking at here, median expectations are for a unchanged figure from the previous. The last time we printed at 53.8 was a slight beat on expectations, with new work growth recovering from June's 9-month low. And the pace of job creation was the strongest since January of 2016. So it will be interesting to monitor this. Obviously, we're going into what many would argue increased uncertainty now over Brexit negotiations, given the lack of progress made at the conclusion of the third phase of Brexit talks at last week. And so this service number will be critical. Also, I'm sure Theresa May will have her fingers crossed that this number comes out fairly strong, given that she's got her Tory party conference looming in about a month's time as well. So she'll want to see still a healthy economy going into that key event in order to keep kind of conservative politicians on side. Looking beyond this, Eurozone retail sales is a non-event. Don't think I've ever seen that move the market, so I don't think you need to really take much note of that in terms of into your strategies that you might be planning. But then going further forward into the afternoon, relatively quiet actually until we get to 3 o'clock, where we get US factory orders. We've got also revisions to durable goods. Speakers, though, could be of more interest. Why? Because you've got a couple of voting members. In fact, all 3 speakers today from the Federal Reserve are voting members. Cap Plan you can discount because that's going to be overnight, but certainly Brainard, who tends to be one of the most dovish-leaning members, although she has been towing the line of still likelihood of having a December rate hike, definitely worth keeping an eye. She'll be speaking as the US come into the markets around 12:30 our time. Fed's Kashkari, also more leaning to the dovish side, speaking later on this evening at 6:10. So that's pretty much it. So UK data coming up at 9:30. Keep a close eye on that. Then in the afternoon, it's going to be about how does the US, given they weren't in the market yesterday, How do they start to interpret the Korean situation? The European reaction has been one of relative calm. Maybe that's because of the fairly measured diplomatic stance taken by most of the Western powers at this point in time. If the US come in and see it the same way as Europe have, then we'd be looking for potentially further upside in the equity market, maybe a bit of a pullback and a filling of that a gap fill from the pop high we had in gold from the reopening of trade at the beginning of the week. And if that does happen, maybe some downside pressure on T-notes as yields might rise and might provide a bit of dollar strength. Okay guys, that's your wrap. So have a good day. Any questions, of course, let me know. Be available in the chat room throughout. Thank you very much.